Okay, we're live. Thank you for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. It's time to get started. Today's quick update, and we're going to talk about Target misses the target. Nvidia goes up on an earnings miss, which to me is incredibly bullish. And just a general malaise in the market and the fallout from the nuclear bomb in the crypto space that's called FTX and Alameda continues to send shockwave after shockwave with yet other crypto firms possibly going out of business. And it's putting a strain not necessarily on crypto, but on the confidence that the crypto market is actually even suitable to invest in. And that's the worst thing that can happen to it. So let's just quickly roll the intro, and then we've got a really good show. Here we go. All right. Thank you for joining me. We're just getting started. We're going to do the stock of the day. We're going to do the major averages. We're going to look at bond yields. Have you noticed interest rates have been coming down? Even the 30-year mortgage has been coming down. There's a few things to read into this, but I just want to start by saying I think you hear so many people saying investing. I don't know about investing now. We could be heading into a recession. We could be going into a soft landing, which is not so bad as an all-out recession. So maybe we should invest yet. I want you to know the concept of a recession. It's not a concept, but the thought of a recession and the thought of investing, they're two different things. And if you need the stock market to bottom out, if you need to wait for the stock market to hit a bottom and you want to buy at that bottom, good luck. It's not really a workable strategy. You'll probably never invest. The idea is to pick and choose your entry points based on something. It doesn't have to be based on someone else's idea of what's value. You have to base it on when you think is a good time to invest, or you turn that decision over to a financial professional. But the thought that, like, after last week's big up move, and it looks like, things are holding up from last week's big up move. So people are wondering, do we go back to a new bottom? Is the bottom in of the spare market? Who knows? Really? And does it matter? If you need to know the answer to the question of whether or not we already reached a bottom in the stock market during the spare market, you'll never invest. It's not even for you. And it doesn't matter. Because whatever you do now, if the market drops another 10, 20, 30%, 40% from where it is now, 10 years from now, I think you'll still do very well. And that's the point. How long-term or short-term are you? And we are hit with so much information. I really want to stress this. We're hit we're bombarded with so much information about how the market's doing right now, about what retail sales figures mean right this moment, about auto sales, about mortgage rates. And we get into this vertex that something bad is happening now. And it's like an impulsive decision to freeze. It's like when things are going up in the market and all of a sudden economic stats are good, employment is strong, earnings are strong, and it's a rush to get money into the market. And when the market goes up, it validates people's thinking. Oh, I bought yesterday. The market's up today. I bought yesterday and the market's up today. Oh, I must have made the right decision. I'm smart. That's a validator. When day to day, none of this fluctuation in the market means anything. It doesn't mean anything. And then when it goes down and you start to feel pain, you hold off. And every time the market goes down, you say to yourself, oh, I'm glad I held off buying anymore. Or I'm glad I sold everything and I'm sitting in cash. And then when the market goes back up, you'll get back in. It's just this all the time. I think for me now, do I think there are good values out there? Yes. I'm not here to tell you which stocks to buy. I'm not here to tell you if you should invest now because stocks will be higher in a week. I am here to tell you that you could invest now, stay invested now, or keep investing in your retirement plan every month or whatever your pay period is for your paychecks. Keep doing that because over time you'll be glad you did because ultimately the stock market finds a way to go higher. And the idea is when you get to the point in life when you start taking distributions from your retirement plans, you'll be withdrawing a lot more than what you put into them just because of growth of the portfolio of your retirement plan account. Okay. So that's common sense. And most of the short-term stuff that you see, most of the stuff doesn't mean a damn thing. Let's take a look at the stock of the day. Hold on a second, guys. We're just going to move the screen over. And that stock of the day is Target. Right? Doesn't look so bad, right? But it's down 20 when you look at the top number. But it was down $23, 13% today. That is a seriously rough day for a company. That is seriously a rough day for a company the size and quality of Target. I mean, you would think that Target would have such a good handle on its earnings, on its inventory, with all the technology they have. Yesterday, Walmart came out with earnings. The stock shot up, made everybody feel good. Today, Target goes down. So, is Target down because of an industry wide problem in retail with the consumer? Or is it a one off individual company thing? Because obviously Walmart did very well. And Walmart and Target, I look at them very similarly. Or did Target do well because consumers who ordinarily would go to Target and Macy's are trading down to go to Walmart, and that's a sign of tough economic times. Maybe more people are shopping at Walmart to get more for their buck. And that money is coming out of Target. Or maybe Target just did a poor job at managing inventory and had a lot of pandemic type products like TVs and other things people were buying during the pandemic that people don't want now. People have had their fill. By the way, the fastest growing part of Target, the best part of their numbers was basically their groceries business. So infer from that what you will. I think that retail sales was okay today, but we are getting cross currents. We're getting mixed signals galore. And that's one of the things that makes investing so tough. That's why I say don't fret, don't make the mistake of reconfiguring your portfolio that could have ramifications on you 20 years down the road because of today's news. Now, you might say, yeah, but the negative news could have ramifications on my portfolio 20 years from now. I'll say probably not. This too shall pass. Anyway, Target takes things down, hurts the S&P 500, hurts the Nasdaq, hurts retail, it just hurts. That is a huge drop and a loss of confidence when a company like Target, which is, I think, a stalwart in the stock market world, Nvidia. Now, Nvidia is one of the tech darlings. It's up about $3 in aftermarket trading. It was up about $4 or $5 before, but now it's up now it's up $3.40. So it'll bounce around a little bit. But the point is, Nvidia missed on earnings. The stock is up. Well, one thing I've always said is when you start seeing stocks go up on bad news, that's generally a good sign. It generally means that investors who could have, would have, and should have sold the stock by now are already out. So all of a sudden, we have a decent number from Nvidia. I should say a miss. Stock goes up. Nvidia is a powerhouse chip company, still thought of as the technology company of tomorrow. In any event, that's the kind of news we need from Techland. And since Nvidia is one of the biggest companies in the S&P 500, this could actually bode pretty well for the tech sector, which is the biggest sector in the S&P 500. So this could bode pretty well for tomorrow. In any event, Nvidia is way down, some room to climb up perhaps. In any event, it just shows you that not all is bad out there. Let's take a look at the bonds, at the major averages, okay? Dow down 39, no big deal. NASDAQ down 175 points. It's about 1.5%. That definitely gets my attention. S&P 500 down 32 points. Not a huge move. You can't invest directly into an index, by the way, but you could invest in a security that tracks or mimics an index. 10-year yield coming down at 3.69%. Remember that was in the fours, and people said now the 10 years is going to go to 5. Now it's at 3.6. Okay, the VIX came down a little bit, an indication of calm at 24. Bonds. Hello, bonds. Where are my bonds? Oh, here we go. Okay. If you notice, for the most part, yields are down. 1 year they're up a drop, but overall, the 2-year was like 4.7. Now it's 4.3. So everyone I talked to about buying treasuries 2 weeks ago, 3 weeks ago, you've given up some pretty decent yield by waiting, by hesitating, but they're still pretty good. And you're still getting over 4% for 3 months out, and I'm still pretty pleased with that. And I think for the right client, for the right situation, there's 2 ways you could do this. You could have some cash you're sitting on. You want to get high interest in the bank. You could buy a laddered portfolio of treasuries, providing that you're not investing money you're going to need before the particular T-bill matures. And it's a good place to just hide out if you're worried about the market, if you're worried about volatility, and you can finally get some decent yield. So that's pretty cool. Okay, and let's take a look at crypto. The disaster of FTX blowing up continues to spread, continues to hurt crypto. And there was a really good article today. This one here. Gemini, BlockFi, Genesis announcing new rules as FTX contagion spreads. Contagion. And everybody, including the Binance CEO, who, from what I understand, I'll have to make sure. I think it's the Crypto.com CEO. Some of these people have like checkered pasts. Not all of them, a few. But they're announcing that they're going to stop lending. They're going to stop letting people withdraw funds. This is like a really ugly situation. I'm surprised and happy to say that this didn't spread more to the major averages. Because it's said that FTX might have up to 1 million creditors. So if enough people are creditors, in other words, let's call a creditor in this case what it is. A creditor is somebody who got the shaft, who got screwed over by lending money to FTX. Now, if FTX can't pay all these people back, and there's enough creditors, people who got screwed in this case, they can't make good on their own debts, then they start to screw over their own banks, their own investors. And that's how the contagion works. Is it big enough to take down the financial sector of the economy? Is it big enough to take down the dollar or to throw some big brokerage firms into chaos? Right now, I think investors are yawning and saying this is pretty well contained to the crypto space. We'll have to monitor and see if this, we'll monitor the situation and see if this becomes a bigger threat to the overall financial system. Okay. And that's really about it. So I thank you for watching. A couple of things to watch. I hope everybody is getting ready for their Thanksgiving. I hope you're learning something today from me. And if you don't mind, since you put this much time into watching the live stream, give it a like, give me a comment with a question. Ask me a question in the comments or hit me up with your favorite emoji. It helps with engagement, helps spread the good word about what we're doing here, and it helps the rest of your network and social media see the show, at least get the notification that the show is on. Have a great day, everyone. I'll see you tomorrow.